Hello, investors and traders. A very happy new year to all of you. I wish very good health, wealth, and prosperity and a lot of learning in 2025. Now coming to today's video, so ये वीडियो एक काफी इंटरेस्टिंग टॉपिक पे है इनवर्स स्पेशल सिचुएशन इन्वेस्टिंग अब स्पेशल सिचुएशन इन्वेस्टिंग आपने सुना होगा and recently we had made a video about Jubilant Industries which was a special situation video. Please note that whatever we discuss on this channel, nothing is a buy or sell recommendation. If you are here for stock tips, this is not the channel for you. And the word special situation itself means something which doesn't happen every day. कुछ ऐसा जो रोज रोज नहीं होता, बहुत कम टाइम होता है, and that is where things like a demerger or things like acquisition, those kind of things may become a part of special situation. Now, what I am talking about is a inverse special situation. So, inverse special situation का मतलब क्या है? ये कोई टेक्स्ट बुक में नहीं मिलेगा. This is more based on the current situation in which one case study which we are going to do is based on. So, usually in special situation, there is some short-term trigger which is there in a stock and hence some kind of value unlocking which is supposed to happen. And then maybe in next 3 months, 6 months, 9 months, 1 year kind of time frame, some kind of value unlocking is supposed to happen और उसमें पैसे बनने के chances होते हैं. That is what we call special situation. Inverse special situation क्या है कि situation तो ये भी special है. This is a special situation. But the expectation of making money, which in special situation is in the immediate short term, maybe next 3, 6, 9 months. In inverse, I think that expectation has to be killed. So it looks a very safe bet. It looks like from here a good amount of money might be made. But when that would be made, there is a huge time uncertainty to it. And I'll discuss about the case study today and why I'm telling it's an inverse special situation, because one should not have any kind of short-term time expectation. So think of a company where the current market cap is almost same as the cash on books on the company. Do you think you will find these kind of companies regularly every day? There might be certain set of companies where it is possible. If you look at a lot of holding companies, this might be possible that the market cap and the total investment and cash on the books is kind of similar or maybe 60% all of that. But a company which is a non-holding company, a company which is into some kind of core operations, and still the market cap of the company is almost similar to investment and cash on the books, it doesn't happen every day. And that is why I am calling it a special situation. And the reason I am calling it inverse special situation is because there is no immediate trigger how in a small special situation value is unlocked. So I don't know if you have guessed the company by now or not, but the company name is Maithan Alloys. It's not a new company on our channel. It's not a new company to me. I had discussed this company, I think 2 years back, somewhere in 2021. We made a 2 series video on Maithan Alloys. So if you want to understand the business model of Maithan Alloy, those 2 videos are more than enough. Nothing much has changed in terms of how they operate, except some acquisitions which they have done and their cash on the books have grown up. So I'll keep shorter focus on explaining the business, but bigger focus on the current situation in which the company is. Still, just to give a brief about the business, the company is present in the steel value chain in the ferrochrome business. Ferrochrome is something which goes into steel manufacturing. So manganese alloys and the ferroalloys, these are the things they produce used in the steel industry. Have 3 plants in Visakhapatnam, Kalyaneshwari, and in the West Bengal side in Bairinihat. Now, why Maithan Alloys came on my radar is because of the amount of cash and investment which is lying on the book, and given it's a company I track, anyway, these kind of companies remain in front of eyes. Also, last 1 year has not been good for the Indian steel industry. And if we look at the current market, there are very, very few industries or sectors which have not performed. And steel is one of them because of the heavy price fall in the steel, because of the China dumping in the steel market. And everybody in the steel value chain, most of the companies, they have felt the pressure. And Maithan Alloys is also a company which is in the value chain of steel sector through chrome alloys, and they have also been affected, which is visible in the sales. If you look at the sales of Maithan Alloys, you can see in 2023, it did almost 2,900 crore sales. And then the sales has peaked up and the current sales number is 1,700, which is almost a 30% fall in the sales number because the realizations have fallen and because the whole value chain, the realizations have been going down. And a 36% margin of 2022 has come down to 7% margin. This is nothing new. This is how the cycle of this business operates. Even when you look at the 2017-18 cycle, it peaked around 21% margin and the bottom was done around 6% margin. So 6% to 21% to 13% to 36% to 7%. It's a company which is a typical commodity company, which is into a commodity sector. But despite of that, when you will see, the company has grown from 11 crore net profit to 292 crore net profit, which fell to 222 crore to 818 crore to 349 crore to 826 crore. Which means despite of all of that, the company has been able to generate massive profit. And despite of being a commodity business, this business has never done one single year of loss. 6-7% is the kind of margin where the company bottoms. Again, I have discussed all of this in a lot of detail in the old two videos. You can go through this video. Now let us come back to the current situation of Maithan Alloys. What is interesting? If you see the current market cap of Maithan Alloys, it's somewhere around 3,200 crore. And when you look at the balance sheet of the company, they have almost 3,400 crore of investment, which means if you consider this investment as liquidable investment, your investments are almost more than your market cap. And the whole core business where I leave it up to you. What do you think about the sustainable profit? By this time, you will have an idea that neither this 7% is reality nor this 20% is reality. The reality might be somewhere in the middle, maybe a 10%, 11%, 12% number. So even if you take a 2,000 crore as a more normalized sales and a 10-12% number, still a 250 crore operating profit is the kind of business this company has, which they keep doing and they will keep doing and they will keep expanding because steel in India is expected to grow at 6-7%. And the company has a history of growing higher more than the industry. So my view is this company, the core business will keep growing at maybe 8, 9, 10, 12%, which means the 250 crore of operating profit will keep growing. So whatever valuation you want to give to this company on that way, I leave it up to you. But keeping that valuation of the core business aside, right now what is worth pondering is we have almost 3,400 crore of asset on 3,200 crore of market. So at Scientific Investing, we do a lot of such case studies in a very, very process-driven manner. We have built our tools and technologies, we have built our system, and we have very well-defined Techno-Funda process where we execute it. And I have been conducting my 2-day workshops in multiple cities. Recently, in last 2-3 months, we have done our 2-day workshop in Bangalore. We did another workshop in Mumbai. And now our third workshop is coming in Delhi, which is scheduled on 1st of February, 1st and 2nd of February. Also, with this workshop, you get exclusive 3 months of practitioner access, Simba access. Do visit the website to know more about our practitioner subscription, our Simba subscription. And if interested to visit our Delhi 2-day workshop, feel free to join the link and register. Okay. So when you take the latest September balance sheet and you see this is where in the balance sheet, the company has almost 2,500 crore of current investment, and they also have some 800 crore of non-current investment, which sums up to 3,300 crore. Now the question is where this current investment is residing. This is where it gets interesting. And what I'm doing is I have taken the FY24 annual report and I am telling you where all the company has deployed all this investment and cash. And they do have some kind of government bonds and security, which is like your almost 60 crore. And they have some more investment, but they are more into liquid fund and all. Another maybe, maybe 200, 300 crore. And they have some more debentures, which is another 150 crore. Now, if you see from here, they have given money to be managed to multiple portfolio management services like Carnelian, ICICI Prudential, Stallion, and this money is more than 100 crore. It gets further interesting when you look. The company has invested in lot of direct stocks, and actually when you'll go to the NSE website and you'll see their filings, every week they have been buying some stock from the market. So out of that 3,300 crore investment, the company has invested, it looks like almost a kind of mutual fund portfolio where you have all these stocks. This is 32 crore in Bank of Baroda, 21 crore in BEL, 14 crore in DCB Bank. So you have so many companies here. And this is where what I was talking about the filing. So basically, the money has been invested in the equity market. 70% of the money has been invested in the equity market, either through mutual funds or through PMS or through direct stocks. And that is the reason why you see company has generated huge other incomes because of appreciation in the investment value. If you see, this was 358 crore, and on a TTM basis, this has become almost 994 crore. And this is how the cash on the books, the investment has grown. I mean, the company generates almost 250, 300 crore of profit, and then, your investment value has doubled and whatnot. Now, if you go by typical, kind of Buffett world of looking at these companies, you might call it pure capital misallocation because, a company which is into ferroalloys, they are acting like a portfolio manager, buying and selling stocks, so they have no job to do. However, the question is, what do you do when you have so much of cash being thrown in the business? And the one way you can do is you can put it in FD, and that is one way to do it. But here the management has taken a call to go and deploy that money in the market and make more money out of it. Now, whether it's a right, step or it's a wrong step, I will not get into it. But I would like to highlight how management thinks about their core business. It's very important to understand where this company suffered in the 2008 market when they were not very much risk oriented, and they suffered because they tried to make short term gains and all, and then they decided to distance from the greed and all, and that is where they went for this kind of business model, and that is where they started giving a lot of importance to risk management, what they will do, what they will not do. They also started diversifying their business. They became a low cost producer. They didn't went for unnecessary acquisitions despite of sitting on cash. They didn't go for a asset heavy business by acquiring mines, and they kept growing, and they have become one of the, you know, key player in Asia in the ferrochrome business. And you can see the statements like, we are not in the business to capture the market share. They want to be very, very focused in terms of focusing towards ferroalloys. They don't want to play in the commodity market by trying to, get into price momentum based benefits. They are not focused on revenue but focused on margin. And one of the recent example is one of their plants, they have shut it down. So they have just shut down the plant because they feel if the financial economics is not good, it's better to keep it shut down rather than incurring losses. And usually when they hit the 6% margin, many in the industry, they start going in losses. So you can see the kind of mindset the company has, and this kind of mindset company has gone into, managing their money in terms of investing in the market. So I leave it up to you to decide. But when you look at where they're investing, I see a lot of Calcutta-based companies. There are a lot of companies in the value chain in which they are operating. So they may have some kind of inherent, information advantage or understanding of the market or understanding of the geography. In terms of business, it is one of the most efficiently run business, and there is almost a 14, 15 year of history available. where they admitted their mistakes of what they have done in 2008, 9, and since then they have not repeated. So I don't know if this is going to be another set of mistake, or this is going to provide them a huge investing surplus on their books, which will help them to maybe tomorrow go and acquire a company much bigger than their usual capacity. Only time will tell. And I don't think they can even go for acquisitions because they had some 700. In fact, last cycle when I played on Maithan, when the videos were made, 2019, I think on a 700 crore kind of market cap, the company was sitting on 400 crore of cash. So that time, this cash to market cap ratio was almost 60%. Now this ratio has become almost 100%. And then that time, whatever cash they had in 2021, they did one acquisition. So they have tried to do acquisition, but currently, I think in last 3 years, even in steel sectors, most of the balance sheet are in such a good state that you will not find a lot of attractive, you know, bargains in the market. So maybe if the current bad steel cycle continues for next 1 or 2 years, and then some of the companies face the heat, might some good opportunity might emerge. So that is another reason why this company doesn't, doesn't have an option to, utilize this money. Of course, they can do a buyback. They can give it back to the, investors in the form of dividends and all. So I think that is a call management has taken. It could be right, it could be wrong. Only hindsight will tell. For sure, it's not a very, very investor-friendly company. When I say not a very investor-friendly company, it means having the communication, having the con call, doing things which will excite the investors. But I have not seen the company doing anything which is so far in terms of cheating the investor or siphoning of money or those kind of things. Now only time will tell how all of this will unravel. But that is why I'm telling it's an inverse special situation, because there is so much of margin of safety where the whole business is almost available free. Let us say market crashes by 20%. Let us say their portfolio, if you are in the market, you can see their set of stocks. You can have an idea at what price they have purchased. Let us say their portfolio falls by 20%. Still a 3,300 crore investment portfolio will remain almost at 2,600 crore, which is almost 90% of the market cap, and the core business is intact and it is doing well. So there is a huge margin of safety, but how this will get realized and how this will benefit investor, that is totally uncertain. Usually when these kind of bets, and currently I don't have any position in the stock, and again, nothing is a buy or sell recommendation. Again, this is an exercise on how do you identify these kind of disproportionate opportunities in the market, how you set your expectation. This is a case study on that. But usually when I come across these kind of situations where there is a huge margin of safety, or there is a chance to make a disproportionate return, but there is a huge uncertainty, these kind of bets cannot become big part of portfolio first. I can't do this on 30% of my portfolio. Maybe I'll do this on 5% of my portfolio. That is point number one. Point number two is I will have my expectations aligned. I cannot expect this part of investment to perform in next 1 quarter, 2 quarter, 4 quarter. These are things where one need to buy and sleep over it for 2, 3, 4 years and let time decide. And then some of these bets might go wrong if management does any hanky panky in siphoning of money, or if market feels that they have lost all the money by putting in shitty companies and all. I mean, all that remains a risk. But these are the things which don't happen every day. These are the kind of balance sheet you don't see every day. And that is why I call it an inverse special situation. So I hope this video was useful. One more thing I would highlight how to identify these kind of opportunities. So single metric, look for companies where investment and cash is significantly higher to company market cap, maybe 50%, 60%. If you create a screener in the screener tool, you'll get the list, and then you can always filter out companies. So filter out the holdco companies, and then you will have a list. Usually the companies which have lost on the growth and all these kind of companies will be available. But many times I have come through brilliant investing opportunities by following this. In fact, one more company which I invested 1.5 years back was Sharda Motors, where on a 1,600 crore market cap, the company was sitting on 600, 700 crore of cash. And the company was generating almost 200 crore of operating cash flow, which means the company was available at 5 times X operating X cash on the books. And the company was growing at 15-20%, 8 year, 5 year, 3 year. And even after investing, the company kept growing at 20, 25, 30%. Now only, the price stopped, the results stopped. So the key message is keep building these kind of scanners, which can help you to get interesting opportunities and keep studying them and then build a right framework at a portfolio level because stocks are stocks, they will come and go. But how do you handle in terms of portfolio? How do you handle in terms of expectation? That is key and that is important. So I hope this video is useful. So if you like our content, do share it, do like, do subscribe, and the more you share, the more we will be able to reach to more number of people. Again, wish you a very happy and prosperous new year full of learning, good health, and good wealth.